afternoon, everyone. It's a great pleasure to be here, great pleasure to see you all. The print can get a little fine maybe later on in the presentation, so throw shyness to the wind and just come to the front, okay? Our objective is to show you how to go about buying shares when nobody wants them and selling shares when everybody wants them. As an example, if you trot across to the Lion Trust stand, Lion Trust was the first share that I bought after the 2020 sell-off, after the pandemic. I was advising VectorVest customers to buy stocks the second week into the UK lockdown. I was getting some very interesting emails. We bought into Lion Trust at less than £9. It went to £23. It then pulled back, and your humble correspondent got out at $20.95 from memory. It's now back at 8 again. And nobody wants them. That's why it's probably going back onto my watch list on Monday afternoon. So I'm going to try and show you in the next 20 or 25 minutes how to go about doing that. In the trading world, there's only 4 outcomes, Paul. 1, a big win. 2, a little win. 3, a small loss. And 4, a huge loss. Your objective is never to have a huge loss. If you can do that, lad, then you're going to make a heap of money in the market. Okay? At VectorVest, we want to show you how to go about finding the very, very best stocks in the market, stocks that are growing earnings strongly and safely, that are rising in price. We want to try and do that objectively with cold, hard numbers. Our information is completely untainted by any commercial bias, quite unlike many of the recommendations that you're going to see on social media, because those blokes on social media that are tweeting about a company, there's a good chance that they've been incentivized to tweet about a company. So we haven't got any affiliation to any brokers or to any companies out there. Unbiased, objective information. Before I can get there, that's probably a slide that you can't see. We are fully authorized by the FCA, which means that I can't give one-on-one financial advice because I haven't sat down with you and done that long and a detailed fact find that your financial advisor will have done. I'm allowed to talk about shares that I hold myself, but I have to make it very clear that although those shares are suitable for me, they may not be suitable for you. So that said, we can move on to what we're going to try and do. And what we're going to try and cover is the VectorVest system of analyzing shares. There's a good time to be in the market, and there's a bloody awful time to be in the market. And we want to be able to tell objectively when it's a good time to be in the stock market. The most important thing to know is whether the overall market is rising or falling. Everything follows from that. And I keep saying to the VectorVest regulars who listen to me on a Monday afternoon that 70% of the exercise is knowing whether the market is rising or falling. A big part of the VectorVest process. And then we want to try and find easily, without a great deal of effort, the best growth stocks on VectorVest. Cut to the chase, in case you have to leave early. We want to find undervalued stocks that are growing earnings aggressively and safely, at least safely enough so you can sleep at night, that are rising in price. And we want to be very aggressive in the market when the general market is rising in price. And we want to be very sheepish in the market when the general market is falling. Very careful. Very careful with our money. If you don't take care of your money, you may find out that it, in fact, finds a new owner. So let's see how we can do that. My objective is to show you how to invest with confidence and outperform the market in 10 minutes a day. So the very first and the cornerstone of VectorVest is valuations. And valuations are a function of earnings, how much money the company makes, inflation in the general economy, and interest rates in the general economy. And largely, as earnings go up and inflation and interest rates go down, that's good for valuations and vice versa. As you know, at the moment, inflation is not going down, it's going up. Interest rates are going up. That's not good for valuations, and valuations have come off a little bit because of that. We believe that every investor should know the following. What's the stock really worth? My grandfather told myself and my brother a lifetime ago that the only way to make money in anything is to find the value of something and then pay less for it. How safe is the earnings stream? And then, is the stock rising on a buy recommendation, slugging it out on a hold recommendation, or falling like Lion Trust on a sell recommendation? And we're not interactive here, but if you come to our stand, I'll show you the sell signal at about £20, £21 on Lion Trust. You don't have to take that sort of a haircut from £21 down to £8.95. You don't have to take that. So let's dig into value. The first number on VectorVest is the value of the stock today. The second number is a measure of the future, which is called relative value. And in relative value, we give an indication of what the share price should do in relation to what a corporate bond will pay in the future. So it looks at price, it looks valuations, it looks at earnings growth. Discounts those into the share price, works out the upside, and compares that upside to what a corporate bond will pay. Now, if the relative value is less than 1, you're underperforming a corporate bond. And to buy into that stock is pretty stupid, because you would be buying into a common stock and you could get more return from a bond. Now, those of you that know the pecking order of who gets paid will know that the bondholders get paid just after HMRC, whereas the common shareholders only get paid well down the line. So for me to look at a company, my first requisite is that the share's undervalued, and secondly, I want the relative value to be greater than 1.25. In other words, it's going to outperform a corporate bond to make it worth my while. This is a measure of the future. The second number is relative safety, which is a measure of the past. The VectorVest algorithm looks at the balance sheet, the income statement, the cash flow statement over the last 5 or 6 years and makes a judgment as to whether those numbers are getting better or getting worse. It looks at all those financial ratios and makes a judgment in exactly the same way as some Italian-suited CFA fellow would sit down and make that judgment. Some years back, I had a meeting such as this for city analysts. 50 of the buggers. Okay? I had to offer free wine. Okay? A stockbroker will travel 100 miles for a free glass of wine. So I offered the same trial as I'm offering you guys here today, and I was disappointed that not one of those analysts took me up on the trial. And I went home glum. The next morning, I saw the orders coming through online. They all bought online. They didn't want to show any of their peers that they'd bought into it. All 50 of them, every last one of them. So it saves them a huge amount of work. On VectorVest, a stock with a relative safety above 1 is fair. A stock with a relative safety above 1.3 on a scale between 0 and 2, this is a stock that's making money and hasn't put a foot wrong in a long time. All those ghastly ratios are getting better. Now, if you're very aggressive, who's the young fellow who wants to buy the Ferrari? That young man at the back. You're going to have to drop the, he's buying a yellow one, I'm buying the blue one in HRO in South Kensington. I walked past it last night. But a yellow one's going to suit you nicely, man, I'm telling you. Even those two girls are making the coffee at M&G, they'll make a beeline for you in that yellow Ferrari. So you can't go wrong, lad. You really can't go wrong.
Go for electric one.
Oh, here we go, here we go. RS greater than 1, the further above 1, the safer the stock is. RS down towards 1, there's more risk in the stock, but there's more chance that it's been mispriced. So you can get much, much bigger moves in those type of stocks. But they're not the stock, an RS of 1 or less than 1, you don't want to go on a fishing trip. You need to be watching the thing and managing stop losses carefully, otherwise it could fall from 23 to 8 in a flash while you're casting. So relative safety, very important. The third measure is relative timing, which is a measure of the trend. If it's less than 1, the share is falling. Above 1, the share is rising. The further above 1, the faster it's rising. And then what VectorVest has done is to be put together relative value, relative safety, and relative timing into the one single measure, VST. And that puts together both fundamental analysis, the study of value, with technical analysis, the study of trends and turning points, all into the one number. As a default, all of the shares on VectorVest are sorted by descending VST, and that's where the winners are. We put a stop loss to every share every single night, and that's how I got out of Lion Trust at £20. It hit the VectorVest stop loss, and I simply got out. Remember those 4 points. No big losses. I managed a trading floor for a long time, full of youngsters, 15 or 20 of them, all with Ferraris in their mind. All of them that were successful, I managed to beat into their head, never take a big loss. There was 3 or 4 that weren't successful. They said the market is wrong. And they just sat in shares while the damn thing kept falling and falling and falling. And finally, the main office manager hoofed them out. Simple as that. They were in the back office stamping share certificates, metaphorically speaking these days. So don't take a big loss, folks. The stop loss is calculated. It's adjusted based on the fundamentals. If the fundamentals of the share are good, then we widen the stop loss. We give the share more room to move. If the fundamentals are dodgy, in other words, RV and RS are low, then we tighten the stop loss because there's actually a higher probability that you'll get a savage move against you. So we take care of our money proactively. Just remember, if you don't do that, it can quite easily find a new owner. We put a buy, sell, or hold to every share in the market every single day. And that's one of the reasons we're authorized by the FCA. They took exception to that, and they said that we needed to be authorized to be able to give you good people such signals. So, and this is where the printing's a little bit fine. All I can see is a blur, tell you the truth. Eyes are stuffed looking at charts for 40 years. Can everybody see that? You're all lying. Capricorn Energy. trading at 244. We believe it's worth 350. That's good. Undervalued. The only way to make money in anything is to find the value of something, pay less for it. The RV, which is a measure of the future against a corporate bond, 1.85. That means that we believe it's going to outperform a corporate bond by 85%. The RS, which is a measure of the past, at 1.38, is saying that these numbers are good, these numbers are getting better. The trend, short-term trend, 1.34, heading up strongly. When we put those three numbers together, it's got the highest VST in the pack. I did this a week ago, and if you come out to the stand now, it's exactly the same place, right at the top. It's on a buy recommendation. Stop loss is 227. This CI measures the long-term trend. So if you think of the RT measuring the short-term trend, the CI measuring the long-term trend, that's essentially what it is. Really good number. And this number here, GRT, measures the percentage annualized growth rate in earnings next year. It's going to grow earnings next year at 50%. Now, that's a snip of the front page of VectorVest. If we go to this side, there's a great deal of information on PE, earnings yield, dividends, growth, sales growth, etc. And you can have a look at that on the stand. The next one's Thungela. That's one of my best stocks this year. The only thing that's actually gone up this year has been energy cigarettes. You work that one out. Energy and fags. Who smokes here? It's amazing. When I started to do these seminars 40 years ago, if I'd said who smokes, 3/4 of the room would have put their hand up. Okay? And people would light up halfway through the room. When I told my son that they used to smoke on airplanes, he couldn't believe it. Thought I was lying to him. Thungela, energy, the old Anglo-American coal division. Know it so well. I lived in South Africa for 35 years. It's undervalued. The RV is so high, it's on 2. RS 1.45, it's gone flat for the moment. It's on a hold recommendation, and we want to wait for that to move to a buy before we would get into it. And I'm waiting for that because I want to add to the position. I bought into it twice. I took some profits. I want to buy back into it again. And it should grow earnings at 51%. If there's any risk in that share, they've got so much coal sitting in the mines, they can't get it to the port because the South African railway system is such a bloody mess. This is Serica Energy. We have one of the biggest shareholders in Serica Energy, one of our customers, that grinning fella in the red pullover sitting there. He took a big dividend today. That's why he's grinning like a bloody Cheshire cat, because he took a dividend out of Serica today. How many dividends have you had out of that now since you've held it? 4. 4, he says that. He had to think about that. He knows it to the last cent how much he's made out of it.
3,200 I get today.
Okay, well done, man. It's pulled back a little bit. It's on a sell recommendation. So if you've got it, you have to be careful. If you haven't got it, it's too early to buy into it. But the numbers looking really great in this. And I particularly like this one, 4 imprint at the moment for a trade. I'll show you the thing at the moment. If we go, that's Serica. And I would like to see Serica break up. It's sitting right at support. I would like to see it break up through that trend line and that to go to a buy. So if you want to pay for your petrol today, coming here or whatever, then I think that Serica will do that for you, but you need to sit and wait. You've got to, if you want to take a 60-day trial of VectorVest, it's going to cost you $5 for a 60-day trial. I think that'll go to a buy recommendation within the 60 days, and you'll pay your $5 back plus your £5 sandwich and your £3 cup of coffee back easily on that. That looks really good to me. This is the valuation. The green line, that's earnings per share rising nicely. Although the natural gas price has pulled back, it's still 3 times as much as it was this time last year. And the seasonality for gas is really, really good, i.e. it's starting to get cold. So that's Serica. That's Capricorn Energy, moving up very strongly. See how the earnings came in? VectorVest immediately revalued the thing. The algorithm does that automatically for you. Can you see the amount of work that it saves the analysts? That's for imprint. Those of you that are technicians should see the flag pattern, a breakout, this moving to a buy, and that should move to about £50. Nobody knows what's going to happen next, but I would give, if that breaks out, goes to a buy, I would give that an 80% probability of moving to £50. And your humble correspondent will be in. Okay? So the key, and 70 to 80% of the exercise is the overall market. If the overall market is rising, everything is easy. If the overall market is falling, then you've got to be very careful to make money. As I say, the only thing that's been rising this year was energy and the odd defense stock, British, what's it, the big BAE, British Aerospace, and the odd Imperial Tobacco have been rising. Everything else has been in free fall. So market direction, rising stocks and rising markets is our mantra. That's my metaphor. Take forever to get up there and they fall very quickly. I haven't been on one of these things in 40 years, but I can't imagine much has changed. We want to buy stocks that nobody wants and sell stocks that everybody wants. When it's time to buy, you won't want to. Simple as that. It's getting close. It's getting close. So the front page of VectorVest is engineered to do that. The longest, this was done a week ago, and things have changed a lot in the week. But as we go into the trading day today, the short-term trend of VectorVest is up. The medium-term or the underlying trend is down, and the longest-term measure of the trend is still down. As I said to the young fella at the back, who's the spread better, if you're spread betting, you should be in already for short-term moves. If you're a medium-term investor, you're still waiting for the market to turn, to give a confirmation signal. And that's what's happened to the overall market since COVID. That's the big COVID sell-off. Now, in the COVID sell-off, nothing went up. Everything fell. There was no diversification. The only consolation in the COVID sell-off was that bonds went up. On this sell-off, bonds were falling, so there was nowhere to run apart from cryptos, and I don't understand cryptos. I'll leave that to somebody else. Okay? That's what's happened during the course of the year, and we've been on a sell signal for the last 2 months now. So mini budget and whatever, we shouldn't have been taking positions. It's still time for the market to turn. So I've got a little bit of time left, not so long, but trying to find the best stocks on VectorVest. And we have a tool called Unisearch which will do that automatically. And in Unisearch you can build your own requirements. And you can put together, for example, if you want a stock that's undervalued, that's growing earnings strongly, plus it pays a dividend of 2.5%, you can search for that. Okay? You can exclude funds, you can exclude investment trusts if you feel like it, or you can add investment trusts so you can actually search for the stocks that you want to suit your objectives. I think, folks, for growth investing, RV is the key. I want the RV to be high, above 1.25. I want the earnings to be strong. I want growth rate to be well above inflation and interest rates. And I want fair safety. It's not a conservative portfolio. It's an aggressive portfolio. Fair safety is RS greater than 1. And this is a simple search that I put together. I'm looking for relative value to be greater than 1.3. Relative safety greater than 1.2. And I want the value divided by the price to be greater than 1.05. In other words, that the share is trading slightly below the VectorVest valuation. It's a very simple search. I've been using it for years in South Africa and in the UK, and it's called David's Big Hitters for that reason. We sort by this combination of value, safety, and trend. Now, for swing trading, to get to the yellow Ferrari, and I'll electric one for this young man here. Okay. To get to the Ferrari, independent of power source, we have to be a little bit faster on the turn. And for that, we use a medium-term market timing signal called the DEW. I'm going to actually spare you the acronym, but it measures the turn in the general market fairly fast. It's a mechanical entry and exit signal, and no thinking or subjective input is required. And those are the signals. Now, that's the signals over the last 4 months. Now, there was a buy signal on the 19th of July that lasted to the end of August. That sometimes they last months, sometimes they last 3 weeks. So these are short-term signals to get to the Ferrari quick. That's what we're talking about here. We're not talking about conservative investing. Now, you could certainly have made money here by shorting the market if you've got the ability to sell something you haven't got. That's quite difficult on the UK market because the inverse exchange traded funds are completely and utterly illiquid. And to do it in the UK market, you're going to have to open up a spread betting or a CFD account. In the US, you can do it easily. You can hedge your position easily because there are literally dozens of very liquid exchange traded funds or inverse exchange traded funds. But here I'm only talking about making money when the market is rising. We're just about to get a signal to go long here. But the last signal I had was there to there. And on that date, I ran David's Big Hitters on the 19th of July, your humble correspondent's birthday. And that's what came out of it. Serica, Tongella, Gresham House Energy, Capricorn Energy, JP Morgan, America Investment Trusts, et al. So, and I tested those to the down signal, and I took 6 of them. This young man at the front told me earlier that he had 60 stocks. This is not what we're trying to do here. This is fast. This is Ferrari country we're talking about here, okay? So you want to get in quick, let it run, take your money, and leave. We're not building a barbecue here, okay? So it's relatively quick in and out. Sometimes they'll last for months, sometimes they'll last for weeks. Are you up for it? I think you are. Okay, lean and mean, man. I love it. I love this short-term work, making money relatively quick. There's something quite sexy about it, isn't it? Yeah. So that's what it did in those. The general market was up 2.45%. This portfolio is up 11%. And you're gone. Mini budget and whatever. The loot is in your pocket. And that's what I've been doing for years. It hasn't let me down in years as well. And I'm waiting for another signal now. I do a Q&A, a question and answer session every Monday afternoon. And for the last couple of Monday afternoons, I've been preparing for this buy signal. And I've been talking about the shares that I'm looking at. I'm actively looking at Volex. I'm actively looking at Games Workshop. I'm looking at Watches of Switzerland. I'm looking at Lion Trust. Quite a few stocks that we've been talking about every Monday afternoon for a heck of a long time. Just waiting for the general market to give me a signal. And I think that there's a heap of money to be made between now and Christmas in this run-up. We're going to get a really big 6-week to 2-month bear market rally. I think there's a heap of money to be made. People say, why don't you just buy the exchange-traded fund? Well, my answer to that is that in this move that lasted from the 19th of July to the 30th of August, an exchange-traded fund would have made 2.45% by taking, no doubt, an extra little bit of risk. I've made 5 times that. So you're getting nothing for nothing. You're taking more risk. You're being more proactive. But that's the results, folks. So it's not for everybody. This morning I looked at a much more conservative way of making some money. But if you've got the testicular fortitude required, then you can short-circuit the system, and it's great fun. Okay? All you've got to do is to get yourself out of the way and just do what the damn thing tells you to do. Getting yourself out of the way is quite difficult. Just remember, I'm going to finish off with the 4 outcomes. 1, big win. 2, small win. 3, small loss. 4, huge loss. Your objective for the rest of your trading life is to avoid those huge losses, whatever methodology that you use. If you do that, you're going to make a heap of money in markets. If you don't do that, then unfortunately, you're going to cry. The best analysts are invariably the worst traders imaginable, because they think they know what's going to happen next. They think they've worked it out. And those guys that on that trading floor, those 3 or 4 that actually didn't make the grade, those were the best analysts. And I told them, I said, forget about this trading lark. You're no good at it. Go and get a job as an analyst. There you can make a good living. And that's what they all did. And now they're working as analysts in companies, drafting wonderful reports, but they couldn't trade their way out of a wet paper bag. Okay? That's a very simple prescription, folks. Undervalued stocks that are growing earnings strongly and safely, that are rising in price, and you want to buy them when the general market is rising. I'm talking about an aggressive swing trading portfolio here. When the DEW signal gives a buy, you get in. Let it run. When the DEW signal gives a sell, you get out. Simple as that. And you wait for the next one. Doesn't have to be all you do. It can be 15 or 20% of your total portfolio. These people are waving at me at the back, so I better stop. Folks, you've been a great audience. If we can help any more, then the place is not that big. We're just outside. Offering a 60-day trial today. If you go online, it's 30, but we managed to get the Americans to agree to a 60-day trial as a show special. My offer is a 60-day trial for a $5. If you like us, then it's £49 a month. It's on a month-by-month basis. And my promise to you is if I can't make you money, you can stop at any time. I don't think I can be fairer than that. Thank you.